Hey everyone, this is Craig from Retire Before Dad. Today we'll be looking at my free Dividend Aristocrats Ranking Tool. Now this tool is helpful to begin your stock research when you have some new money to invest. Anyone building a portfolio of dividend growth stocks may find this useful. I use it to monitor my existing portfolio of stocks to see which ones might be undervalued and worthy of adding to, but I also use it to identify overvalued stocks to avoid adding to those positions. And in some cases, I use it to identify a stock that maybe it's time to sell. Now, this tool allows you to sort by the different metrics that are provided here, or simply just get a sense of which stocks are overvalued and undervalued. So today I'm going to show you where to find this tool and step you through the various metrics. And then at the end, we'll take a quick look behind the scenes to show you the Google Sheet that feeds this table and how I make it all work. To find this tool, go to my website, retirebeforedad.com. I've linked to it in two places. The first is up here in the resources. Go to resources and Dividend Aristocrats. You can also find it on my homepage. It's right here under Dividend Aristocrats. And that brings you to the Dividend Aristocrats list, ranking the best dividend stocks, and it's updated daily. Scroll down and you'll come to the section with the table. Now remember, this is a starting point for further research. It's not a tool that recommends you buy or sell stocks. So don't make investment decisions based solely on what you see in this table. But do use it for investment ideas to help narrow the scope of stocks you might be looking at. It's also a way to avoid certain stocks that might be overvalued. Once you've identified stocks from this table, then use your other tools to go and do research for these individual companies. All right, so this table has all of the Dividend Aristocrats in it. S&P updates the Dividend Aristocrats list every year around January 25th. On that date, I update the table, and then throughout the year, sometimes companies might get booted for cutting the dividend or for acquisitions or other reasons. So anytime you see the table, it's updated with the current list. Up here, you can download the list via CSV, an Excel file, or PDF. So note about the data. I source this data from various sources, including Google Finance, FinViz, which is a financial website. I also use a Google Sheets add-on called Sheets Finance. That's a paid add-on that's really great for bringing stock data into Google Sheets. I also use the Dividend CCC list. This is a spreadsheet maintained by a website called Dividend Radar. So from all these sources, I consolidate into a spreadsheet, and that spreadsheet I'm able to import into my website, and I'll show you how I do that in a little bit. All right, let's get into the table. So I mentioned you can download this data right here at the top. Going across here, we have the stock symbol, the stock name, the price that comes from Google Finance. Now we have the PE ratio. This is a trailing 12-month PE ratio. We also have the forward PE ratio, the PE next year. Next is dividend per share. Now we're not using that as a scoring metric, but it's there because people like to see it. So we have the dividend yield, the PEG ratio. PEG ratio is the price to earnings growth ratio. Generally, the lower the score, the better. The PEG ratio takes the PE ratio and factors in analyst estimates for future growth. Next, we have the dividend payout ratio, and that's simply the percentage of net income paid to shareholders. We use the payout ratio to get a sense of the dividend safety. So if there's a higher payout ratio, the dividend may be a little bit more at risk than if there's a lower payout ratio. Also, when there's a lower payout ratio, that gives companies a little more wiggle room to increase the dividend. And if it's a higher dividend payout ratio, they may not increase the dividend as much on an annual basis. Which brings us to the 5-year dividend growth rate. The dividend growth rate is the rate at which companies increase their dividends year over year. I'm using the 5-year dividend growth rate because it gives you a sense of what management has been doing over the past few years. Often high dividend growth rate companies have lower yields and higher PE ratios. A lower dividend growth rate means the company might be more mature, not growing as fast. Sometimes they pay a higher yield. When they're already paying out a good portion of their profits into dividend, they may not have as much wiggle room to raise the dividend. And that's why you'll see a lower dividend growth rate for some mature companies that are paying a higher yield. All right, so the most important column in this table is the scoring system. I score each stock on a 35-point scale. Now there are 7 metrics over here that we use, and each one gets a score of 0 to 5 points. The only one that we don't score here is the dividend per share. So the maximum any stock can score is 35. I sort the whole table by the score, and that way the cream of the crop sort of floats to the top. Now you can sort by any of these columns. If you're looking for lower yielding, high growth companies, you sort by yield. You can sort by high yield. Now in this case, Walgreens' dividend is getting kind of high. So when you see a high yield like that, it could be indicative that a dividend cut is on the way. And of course, a dividend cut would disqualify companies from the Dividend Aristocrats list. You might remember VF Corp. VF Corp's yield started getting really high, and ultimately it ended up cutting its dividend. The default is to sort by the score, but you can sort by any of these metrics. Now, I want to point out that if you see any numbers that look out of whack, like this negative 93 peg ratio, or when you see zeros for any of these fields, the zero may indicate that the data didn't load properly, or that the data provider's data just isn't accurate at the time. So anytime there's inaccuracies or blanks or something that seems wonky, I'll put a 0 in there, and the 0 counts as 0 points in the score. All right, so speaking of scoring, if you scroll down to the detailed scoring metrics section of the page, I spell out the point system for each of the 7 metrics in the table. If we look at this first one, the trailing 12-month PE ratio, you can see a score of a PE ratio of 0 to 10 gets you 5 points. From 10 to 15, you get 4 points. 15 to 20 gets you 3 points. For each of the 7 metrics, there's a point system. If you go to the page and scroll down, you can see it. And then I use a spreadsheet to calculate the total score, and that's the score we use to rank the Dividend Aristocrats. So here's a spreadsheet I use to import the data and calculate the score. All the columns here align to what you see on the web page. The main difference is the scoring system on the right here. I'll highlight this first cell, and you can see I just use a simple series of if statements to calculate the score based on the data point. I do this for each of the 7 metrics, and then I add them all together, which gives us our score. I have a second tab where I format the data. Then every night I make a copy of the second tab, and that's the one I use to import into my website. Now to do that, I use a WordPress plugin called the Subsystic Data Table Generator Pro. This is a free WordPress plugin, but you do need to pay to get the functionality to import data from the Google Sheets into WordPress. Well, that's all for this video. If you have any questions, please leave them in the comments section. Or if you have any ideas about ways to make this better, I'd love to hear them. Keep in mind, the data is only as accurate as the data providers. I do my best to keep this updated and working, but from time to time, the data may be wonky or it might not load. There are also other metrics I'd like to add, but finding a reliable data source can be difficult. Just know that I'm always working to make this better and more reliable for you. If you like this video, please hit the subscribe button. You can also subscribe to my weekly RBD newsletter at retirebeforedad.com. I send an email on Thursday mornings with free articles and any links to new videos that I create. Thanks for watching.